Larry Shover out in Chicago. Larry, you always have an options trade or an angle for us. What do you make of the fact that, as Betty pointed out at the top of the show, there is no volatility right now?
No, there's no volatility anywhere, no matter what the asset class is. G7 vols, 3-year low right now, oil vol, gold vol, equity vol, everything's low. But beyond that, skew is actually really cheap right now. We're at a third percentile in the last year with equity skew, which means the price people are willing to pay for out-of-the-money puts is at third percentile low compared to out-of-the-money calls. So a great time to be hedging right now.
But Doreen, let me bring you in. Do you feel at all that we may be near a top by any means?
Well, I think it's interesting that you say that because, Betty, the last few minutes, right into the bell here, we got a slew of sell orders. And I think as the market rallied up about 32 points or so, we saw a lot of people come in trying to take some money off the table late in the afternoon. So I think that there is that feeling around that this market is getting a little bit toppy, particularly with all the uncertainty surrounding, obviously, the physical cliff and the Fed. You know, the Fed has insinuated on more than one occasion that this is Congress's problem at this point. So I don't think the fact that they're going to continue any operations is a given.
How about you, Matt? I mean, I know you're you are a long-term investor, you're a value investor, but does this market feel toppish to you?
Well, from my standpoint, we don't try and predict where the market's going to go. You know, we try to find individual businesses that we think are mispriced. It certainly doesn't feel like the kind of bubble environment we're in the late 1990s at 30 times earnings. On the other hand, it's clearly not the kind of distressed environment we're in early 09. And so I think there's not a strong valuation signal, and there will be a sensitivity to what happens both by the Fed and at the political level. And so these things are just too complex to call. Our crystal ball's foggy at best at First Eagle.
Yeah, as it is for everyone. But Larry Shover, you're not allowed to have a foggy crystal ball. I want to know your take on a possible QE4 announcement Wednesday. Dr. Richard Clarida of PIMCO, former Assistant Treasury Secretary, pegs the number at $100 billion per month. That's a big number. And over at Citi, they're saying it totals $1.1 trillion potentially in 2013 to increase the Fed's balance sheet. What do you do in this case?
Well, right now, I go back to the options market, and it's funny because right now there's a lot of put buying going on, so I don't think it's a given that it's going to be 85 or even 100 billion. Something's going on right now, and there's a lot of macro funds right now buying puts thinking that it's going to miss the expectations, even though the Fed is monetizing debt. It's something much different than Operation Twist, and it is true that they're probably going to focus more on 10 to 20 part of the curve. However, when I look at the options market, it's telling a different story that this might not be a layup. It might catch all of us by surprise.
In other words, what you should be doing if you're going to stay long stocks is go out and take advantage of that cheap volatility and buy puts, buy some S&P puts. Is that the trade?
I think it's always a trade, but no better time than now. I mean, especially if you're fully invested right now. I don't believe in investing for Armageddon, but on the other hand, take some money off the table by buying some downside premium to protect you in case there is something that comes out of the woodwork that we're not aware of.
Doreen, though, give us perspective. How important is this Fed meeting going to be for the markets, though, when you've got everybody, with their eyes peeled on Washington?
I think it's very, very important. I think particularly the tone of the press conference after the rate decision, which I think we all know is probably going to remain the same, but I think that's going to be very important. And I don't think we'll really get a clear idea of that until we see how these fiscal cliff conversations are going tomorrow. I mean, anticipating that there could be a change. If there's not, I think that the Fed will obviously step in, and I think that'll be the tone. But that's what everybody's watching for, and I think it should be a slow market. Volumes were a little bit slower today than general.
Yeah, good point, Doreen. You need the two V's, volume and volatility. Without that, it's tough for you to make money. So how are you getting through the past couple of weeks?
Little help from my friends. We're managing. I mean, the volume is very slow, but we are managing. There's still orders around. Mostly short-term strategies, though, I have to tell you. A lot of high-frequency traders in and out pretty quickly.
Understood. All right, Doreen Mogavera, you hang in there. You go have a Starbucks on Matt Miller. Tell him to buy you a Starbucks on the floor of the Stock Exchange.
I certainly will.
All right. Larry Shover in Chicago, thanks for being here. We'll take a look at those puts, maybe do a little insight in action tomorrow on put prices. All right, that is your close.